Well, good morning, all. Okay, first question. Well, first thing is that we've got. You're probably all aware now the ECB meeting. Um, when we next meet on Friday morning, we'll know what the ECB is doing and see the reaction from it. But that's coming up, and everybody's talking about it, as you probably all pretty much aware. Um, so just keep an eye on that. I've had a question on the pound Aussie. Uh, Everybody was looking at getting in this, as I was. I got stopped out 2 days ago. However, other people got stopped out on this engulfing bar. And the questions come is we still believe in the trade. It was unfortunate to get stopped out. It's now heading back in our direction. Should we get back in? Certainly, by all means, you can. But you need to be looking at it in the sense that, well, okay, it got stopped out. So there's still some selling pressure in there. So if we have a look at the majors, and we say, well, why is that? Why is the pound Aussie still full of selling? Yes, we've got this buying engulfing bar, but what's going on with the pound? And we can see it's pretty much going sideways. Whilst the Aussie is also going a little bit sideways, but more to the downside, which is why we've got this bar coming up here. But prior to that, it was bullish. The Aussie was rallying. It turned last night. It's more sort of stuck in between 82.50 and 81.50, but it certainly did turn last night. I think copper and a few other commodities also turned as well. So yeah, you can look at this. You note that the 4 hour is cycling underneath the moving average, and it's now setting up for a potential another short on the 4 hour, and that is also valid. However, what we're seeing here in the daily is some reversal divergence, which is alright. Basically what we want to be doing is saying, well, hang on a second, you've got no sound? You're kidding me. Sorry. Well, the sound will be on the recorded. You have to wait for the. I'm not going to go over everything I've just said. Effectively, I was good, just at the summary when I saw you guys saying there's no sound. Um, you need to approach it with saying, well, is the fundamentals still there that this should be along? And yes, that is the case. Technically, is it still there that I should be looking at setting a long trade? And that's the question, which is I think is a little dubious at the moment. Um, there's quite a bit of resistance here off these highs, which we can see. There's some resistance there that the market's looking at. We can see these highs here, and I'd be inclined to say, well, haven't got stopped out because there's still some selling pressure. It's sort of stuck in between this support level and this resistance level. So I'd want to wait for it to get out, and in that sense, I'd look at the shorter time frame and wait for the 4 hour to get above this resistance level here. Put a cycle of making a higher high than this, so we get that clear indication that we're now the sentiment is where we want it, and it's going off a position of strength. Coming off here or above this engulfing bar, I don't think is that position of strength. Fundamentally, yes, the pound should be outperforming the Aussie at the moment, and we want to be in this. Disappointing we got stopped out. But I'd want to get back above this. Now that I have been stopped out, things are what's going on here. Momentum is pushing up and showing divergence, but perhaps the market might get short off this level here. We don't know. So I'd want to see it above that, what has proved to be resistance, get above that there, and do a cycle above that, and preferably make this a higher high here. And then I'd be looking at going, okay, now I can re-enter the market. Right now, first 5 minutes that I rambled on about, you'll have to catch on the video because I did say a lot of things, but I can't remember it. Does that make sense? Good. Okay, so that's the pound Aussie. Then going to the emails. Euro Aussie Weekly. Do you think it's worthwhile to take this on the weekly? Not today. Um, Planning to enter it on the daily above last Friday's bar, but manage it on the weekly. Um, yeah, with the ECB, maybe Friday, maybe Monday. I mean, this trend line is strong, and that's great. There's obviously a big support here at $1.40, and that's fabulous. Can I see the euro outperforming the Aussie? No, I can't. Even with their ECB, even if they don't do anything and the market reacts strongly on the euro, the fundamental situation is that the Europeans are fucked, and they will continue to be for a long time. Whereas Australia are not, although we are struggling. We're not producing the results that we were sort of 3 years ago. We're still doing okay. China, as everybody's calling, they're pulling back. Well, they're doing 7.4% as the figures came out yesterday. The 7.4% GDP is huge when you consider the volume in that they're doing. Australia's GDP is around 3 or 4, as is America's, but the size of our GDP, gross domestic product, is at 1.6, and the Chinese is far larger than that. And so they're still going to require our commodities, our rocks and soil. If not that, they're going to require our food bowl, which is what they're doing at the moment, is buying up our food bowl up in the Northern Territory and Western Australia, and certain parts of New South Wales and Queensland as well. They're trying to shift their economy from an industrial production house to a consumer-based society, which is smart play. And however, that consumers still want cars, they still want a new house and a new apartment, they still want computers, but more importantly, they want food in their belly, and now they can afford it. And so Australia as a food bowl is going to be the next wave. They'll still want our rocks and metal, yes, but the bottom end of the bottom where I'm going with this is that the Aussie is well placed to maintain its rate, and I think 75 may be the low. Even 80 cents that we've seen could well be the low. Are we going to go back above parity? I doubt it. Against the US, no, because the US is a stronger economy. However, are we going to go up against the euro, and therefore should we? Are we going to go down against the euro, and therefore should we be taking a long trade on this? I don't see it. You might get it up to 55 on the back of the ECB announcement. That fundamentally, I see that as a struggle. Literally, I'd expect this to be heading back down to $1.20. If the euro is going to parity, which is more likely than the case, then I wouldn't want to be buying this. So, going in ahead of the ECB is certainly very aggressive. Doing a minor amount of risk might be a play, but I don't see them. I don't know if you read my report. I don't see them doing the huge shock and awe, which is what they should do. That's just not the European way to do that, although the Swiss National Bank bloody well did. I don't see the Germans doing that or letting Mario do that. More than likely he'll just go the middle of the road, which the market will be disappointed at, and you'll get a bit of a buy on the euro. And that's just the natural retracement that the euro needs to have. As we can see here, the market's stepping time, waiting for the announcement, but it's certainly had a long run, and it needs to have a retracement back into this sort of $1.20 area. even if it's $1.19. But fundamentally and overall, this thing's going. Well, your chart's probably better, but it's heading back down to these areas, and that's where it should do when you consider how poorly they're performing. They've got negative interest rates all over the place. They've got flat inflation, high unemployment. There's nothing good that's coming out of Europe at the moment. So there's no reason why you should own it. Any sort of buying will be temporary. Oh yeah. Possible head and shoulder pattern on what? On the Euro Aussie? Head and shoulder pattern? Well, it might be on the monthly if you look at it. Let's go and have a look at the monthly. Yeah, you could say there's a head and shoulder pattern on the monthly. It's a pretty sharp shoulder on the right hand side. Not much work done there. That's okay. But yeah, you've got there's your neckline across here. Certainly something to look at. I mean, that was a clear head and shoulder on the downside reversal, and now it's setting up another one. Massive resistance here, which Jess had pointed out on her weekly. Big resistance there. Not as strong. The support level here doesn't look as strong as that resistance when you got 1, 2, 3, 4, 5, 6, 7 reversal points, 8, 9 reversal points off that 55 level. And then this is a bit more walked on. You really only got the one sort of couple of them. It is a strong level, but it's nowhere near as strong as 55. So, yeah, head and shoulder pattern certainly a possibility. Long-term play, yeah, we'd certainly look at it for that. Okay, what do we have here then? Sorry, Aussie CAD. What happened to your? Oh, that's this thing here. Okay. Aussie CAD checklist continuation phase 1 short. Yeah, oil had another dummy spit last night. Canadian currency got a lot weaker again. Lower high, lower low is a must. But just on that, I was suggesting going short the CAD. You obviously wouldn't have got triggered in. I hope you wouldn't have got triggered in. The low here was low is 33, so if you had a 25 sort of stop, or low is 21.06, low is 19.33, yeah, so 19.33, 19.31, yeah, so you wouldn't have got triggered in. Luckily, in the Canadian currency is getting a lot weaker, so back to the Aussie and looking at the Aussie CAD. Inside seller bar, okay, well, what are you looking at? Aussie CAD. Aussie CAD daily. Inside seller bar you went short from. Two touches only, good. Glad you recognise that. There's lower high, lower low. What is it cycling along? You can give it a point for the 200. Horizontal resistance at 98.60. Is that this red line? If that's that red line, I can't really see it, but I presume it's that red line, and I wonder why that's not why you've chosen that level, 98.60. You went off an inside bar, which is something that I really don't advocate. In fact, I never trade off inside bars. 98.60. chosen 98.60? Is it because of that low there? Was that 98.21? 98.60. I don't see a horizontal at 98.60. I see one at 99.93 or 99.30. And you could even potentially say, well, you know what? Let's just make it $1. Yeah, there'd be another one as well down here. So there's a zone. Yeah. I don't see anyone at 98.60. Alright. On 98, I don't see it. Where that line is, I don't see it. It's just double bottom at 98. Double bottom at 98. Double bottom at 98. I don't see no double bottom at 98 either. Sorry, mate. Fib retracement. Fib retracement. 618. Biggest no-no is you're going off an inside bar, and obviously you paid the price for that because you would have been taken out, no doubt. He stops just above that at level. It's gone through that. Where's your? I'm trying to work out where your Fibonacci is now. 618. You got the 618 just there. Your Fibonacci looks to be going from there to there, judging by that dotted line. However, that's, you're saying what you got two cycles going here, and you're measuring the full cycle. Even if you went saying, okay, well, it's reacting to the 200 index, oh sorry, the 200 AMA, and you went, okay, I can see that it's reacting to the 200 AMA. Let's draw that fib like that, and we can see it's gone through the 618. Better put the 618 on there. 786, sorry. You could have argued that it was the 780.6 that it was reacting to. But without a strong horizontal, or without a horizontal, and a Fibonacci, this Fibonacci of that move, I think it's a weak setup. But the worst thing is that it's off an inside bar. Okay. And then we get a weaker oil price, and risking how much? 0.25%. Well, lucky it's only a quarter. Okay, so a bit of work to do there on that one. Coming to Dave's email, I decided not to go long on the dollar Sing because when I went to place it, spread was 21 pips and the risk reward was already poor. An hour later, I've just seen that the spread is now 3.8 pips. Is this a normal fluctuation? Yeah, when the Singapore market would have taken some time to open. So you get, when there's no liquidity there because the market's not open, you get a wider spread. Excuse me. Then as the market does open, the spread comes in. Yep. So here we can see with Capital Index, right now you've got a 30 or 29 pip spread. That will come in when they open, which is, Singapore's an hour behind us, or 2 hours behind us. In fact, it might be 3. So I think they're around the same, similar as Japan. So another hour away before they open up, and then the spread might come in. That is the normal process. If I had placed the order and not been triggered into the trade at the higher pip count, at the higher spread, and then in the later day would have been at the lower rate. Yeah, look, what happens is if this price matches your entry price, you are taken into the market, right? What the market automatically does is values your trade across the spread, right? So as soon as I get in, it'll value me at 66. This is a demo account, so I don't give a shit, right? So I buy one, and you can see that it's immediately valuing me my exit price to the other side. Because I bought, I'm a seller, sort of immediately value that at 66. Obviously, if the spreads come into, say, 4 pips, and it then value me, or 2.7 pips, it values me at 80, then that's going to be a lesser loss. But it's only a loss if I realise that by closing my trade. Yeah, if I need to exit and go, oh shit, I did that by mistake and need to exit it, well then, yeah, I'm paying $170 in commission. So the spread may have been tighter later in the day, but it's only really a concern is if you're getting out at that point. However, if it remains a 30 pip spread throughout the day, then that's rather expensive because you are crossing that to get in and to get out. Yeah. Also, I'm short Aussie Sing and out of the money. So if I were also long dollar Sing, am I correct in looking at the combination saying that it's effectively short Aussie dollar? Right, so here you're long, I'm long dollar Sing, yeah. And you're short Aussie Sing, so let's get short that, and I'll show you that it would be the net result. I can't short Aussie Sing through these guys. Well, that's fucking handy. The net result would be if you're short Aussie and long Sing, here you're long dollar and short Sing, so your Sing would be effectively netted out from that point on. Would it be a net for the whole trade? No, because you're obviously in the Aussie Sing for some time and already out of the money. But once you take on a dollar Sing position, yes, if the size is comparable, then it's effectively taking the Singapore dollar risk off the table by doing that. Yep. And note, capital index, you can't trade Aussie Sing at this stage. They may add it, who knows. Okay. Before I go into these other ones, because I know Mark is always watches them online. Later. Possible head and shoulders because I couldn't fit the whole chart in. When you get another Mo, could you talk about the Aussie Sing? I went in short last week and have not been stopped out. Tempted to stay in, but given what you said about the Aussie, tempted to get out. I do note the test bar yesterday. Alright, great. Just needed to check my thinking. Okay, so I need to open Axie Trader. Wake up, computer. Finally starting to move. Come on. You can do it. Aussie Sing. Right. So some people would have been looking at this getting in around here, I would suggest. About there. I do remember saying, well, then you had a reversal bar that was a doji, being this bar here. And why would you move your stop? A little reason to move your stop once that's happened. The big resistance here is around $1.1. I don't have the historical data through AxiTrader to do that, but I would suggest that it's around 1.1 is the resistance, and that's where your stop should be. You did, as you say, you've got a high test there. Again, a lot of selling in there, and I do expect the Aussie to be a bit weaker. It's certainly sort of looking a little weaker and turned again. We haven't really tested that 80 cent level. We got to 80.50, but that's the big level, and I do expect it to be tested in time to come. What's his name behind the curveball, bald-headed fella, Stevens. He expected or wants the Aussie in around this range here, 75, and I may suspect that he will get that. Will it stay there? Who knows? I think fair value for the Aussie is around 82, and we're not far from that. But the market always goes and pushes the boundaries before coming back to fair value. And as we can see by here, it was overvalued, overcorrected, and then you could expect it sort of sit here again. And same up here, overvalued, corrected, and then sat sideways at fair value for a long period of time before the market corrected again. So we're seeing this expansion of away from the moving average and the Aussie to get down here. So overall, short-term bear on the Aussie, and it's starting to roll. If you're in this, it's about managing your trade. You've got a stop that's pretty well protected above here at $1.10. I'd be looking to maintain that stop there, and I'm not sure where your target is down here, or maybe even lower. Be just managing it. We can see that it does go sideways for a bit before having another spit, and I think that should be okay. It's hard to tell at this stage, but it was good to see this, good sellers come in overnight, and you want to see that continuing. But your stop's in the best place, so leave it there. Right out. So, coming on marks, you got long the dollar sing with the Kiwi CAD trend reversal. Phase 2 trend reversal was looking good on the dollar CAD. Is that a strong horizontal there on the Kiwi CAD at 94? You've noted it's reacting to the 2 on this little down. Yeah, look, that's fair enough. Don't know about the 94. And oil prices obviously is proving to be difficult to sort of play with, I suppose is the word, but with the Canadian, you'd expect it to be getting weaker. I think this has worked out okay. Was there some news out on the Kiwi this morning because it shut itself? Yeah, GDT. I don't know what that is. What the hell is GDT? Dairy trade. Well, that'll stuff them. 48% of the GDP is dairy. And they're the largest dairy producers in the world. So yeah, that would stuff them. So that's turned that trade looking okay. The only question I had about that was the 94 level that you had as your resistance. You said it was strong. Fucking AxiTrader, why don't I have any decent data? I don't see the 94 being all that strong when you see it being walked over. Yeah, it's strong there, but it's not that strong here. There's no turning points, one that I can see. It's really had no respect for it, other than once, maybe twice here. There's really no respect for it at all, unless there's something further back that I can't see because of Axi's pathetic amount of data that they retain. But I don't see that 94 as being a huge level. However, it's working in your favour at this stage. That's great. And you certainly identified the divergence in the extension and the bearish bar. That's ring high seller plus bearish bar. That's all good. I just did question that 94, and perhaps there's more data than I can see, and therefore it is a strong. So it's good. You also looked at the dollar Sing. Dollar Sing. That little ring lower there, so you're looking at inside bar. You're cycling along some trend line. 1, 2, trend line support. You haven't given it, which is good. RSI trend continuation, buying US dollar. 50. Yeah. Nice pull back to the 50. Inside, get the buy bar, and away you go. All good. US building permits. Yeah, it's not going to be a big major drama, I don't think. You know, if the ECB do something shock and awe, and you know, you'll see a lot of money flooding. Where are they going to go? Where's the cash flow going to go if the ECB do something drastic? Well, you're going to put it in the Swiss currency? No, you might put it into dollar yen. You certainly put it into Kiwi dollars, potentially even Aussie dollars, because of the interest rate differential. The biggest winner will be the US dollar, though, if that happens. I can't see that happening. I just see them doing, you know, the ho-hum, kick the can down the street like they have bloody done for so long. Swiss yen, right. This one you sent to me Monday after our last seminar. Tried to make you under my analysis of Swiss yen last week. Big low test, bouncing off a level which is also a 78.6 fib line, right? And running with the fundamentals of weakening yen. It did not place the trade as I wanted the confirmation bar. You know what the next bar did. Well, I don't remember what the next bar did, but let's go. I dare say if it was a Swiss yen, it would have rallied to the boondocks. Yeah. So you were looking. Mate, you can't predict that sort of shit, though. You had a low test bar off 115, 15 area. Let's call it 115. That's that one there. Yeah. You wouldn't have got in if you had a stop order above the high of that, unless it traded before the news announcement, which, you know, I doubt it would have. I mean, was the high of that bar? Let's put it. The high of that bar was what? 1564. So you would have been going in at 1570. Yeah. There, I tell you, you would have been filled up here if you had a buy stop on that. 115.7 was your entry. Yep. They would have slipped you big time. And if I was the broker, I would have filled you at that price there, because that's where I would have been getting it. So you wouldn't have got in before the announcement. The announcement comes out. As a broker, I would have been going, well, I can only, you know, fill you where there is a trade. I'm not going to fill you down here unless I want to be out of the money, you know, and I don't want to be out of the money. That's what the FXCM and all those other blokes have done. They're now chasing clients for funds. Good luck with that. So I would have been filling you up here. Hindsight says, oh yeah, that would have been great. Why didn't I get that trade? Well, how much money would have I made if I did that? Well, that's FOMO trading and gambling, because there's fuck all chance of you getting that. And it would have been more ass than class if you did. No one predicted them doing that. No one saw it coming. The only people who did was them, and they were probably the one buying in the market well before the news announcement. They would have made a mozza. And they're the only ones who would have. That's why insider trading is illegal. Anyway, enough of my crapping. That's all we've got to go through for today. I do suggest you don't trade the news on the ECB. It'll be very tricky. Stay away from it. Yeah, that'd be my humble opinion on that. Wait till Friday morning when all the news is known, rather than trading on unknowns. I mean, if you're up at, I suppose those over in Perth, it's 10:30. You might be able to. Friday morning, 10:30 Thursday night. You might be okay for you. For those who night owls, yeah, but people like me who are up early in the morning is the time to be looking at that, not prior to it. Alright. Canadian, don't expect anything untoward from them. Building permits, neither of that as well. So that's pretty much us for the day. If you guys got anything, will be interesting to talk to you on Friday morning once all that crap's out of the way, and then the next headline will be the Greek election on the weekend. We've got a public holiday over here on Monday. Well, I suppose you all do, don't you? It's Australia Day. Yeah, so we don't have a webinar next week because I'll be in Sydney doing the courses. If you're on those webinars on the course, you certainly feel free to ask me a question. But yeah, the Greek election probably won't be known until Tuesday or Wednesday anyway, the way they run their elections. On MT4, does current P&L include exit fees? Yeah. So, what are we looking at? We've got a position. So this, the T-notes. Right, so here we can see bid offer is 90.93. And we can, or 90.5, we can see that that's where the price is closing me out, and therefore this profit minus $10 is that, well, that's in profit as termed, that's 10 US dollars. So if I put it as Aussie dollars, it's $12.24. You notice how I did that? Is that profit, if I do it as points, it's 90 points. If I do it as the currency of the contract, this US dollars being T-notes, it's valuing me at 91.5, which is my exit side. Yeah. Which is, yeah, this price is covered in that, in terms of the exit fees, in terms of crossing the spread, yes. Alright, just an email in. I've attached a pound US. The image says pound Aussie, but you're saying pound US. Okay, pound trade, pound Aussie trade. That green is a bit hard to see, but you're looking to go in above this engulfing bar. Right, we covered this right at the start of the at the start of the webinar. I'm not sure if you were here then, but we certainly did cover that at the start. And my issue with it at the time is, gold's going through the roof, copper's going nowhere. Coffee's getting cheaper too. The pound Aussie. My issue is with this resistance level, I want to see price above that. Yeah, we can see the market stuck in it, and I want to see price above that. And if we can do a cycle above that, if we look at the 4 hour as an example, if we can do a cycle above it and make a higher high, then I'd be interested. Bullish engulfing bar is not something that I'd get excited about. Not when it's, if it's above this, yeah, perhaps, but I want to see it through that first. Okay, in a nutshell, let's watch the video, you'll see more of what I was talking about. But you've done this for, I presume, a potential target. This, you've got hidden divergence. Yeah, you've actually got reversal divergence here as well. This low to this low, and you got a higher low in your momentum. And this Fibonacci to come back to the 61.8 is sort of holding it. As I said, it does fundamentally, it's good. Technically, I want to see it through that resistance level though. Okay, there's nothing wrong with what you're doing, and what you're looking at is just I've noted that resistance level and gone, well, I want to see it. I've been stopped out on it. Once bitten, twice shy. I'll take a bit more of a look at it before I go again. Yep. Okay, guys. Thank you for your time today. Appreciate it. I'll see you Friday. Be careful of draggy, and good luck with it. And yeah, chat to you then. Thank you, sir. Thank you. Cheers.